Let's talk about the earnings season. It continues, of course. Matt, Heineken is targeting €2 billion in cost savings through 2023 as its business suffers from continued lockdowns. The Dutch beer maker expects the pandemic's impact to continue in the first half of 2021, with market conditions improving during the rest of the year. We're joined now by the CEO of Heineken, Dolf van Brink. Dolf, good to speak to you this morning. I know that many people have been missing going to bars, going to restaurants during the pandemic. How much is your business missing bars, missing the on-premise sales right now?
Hi, good morning, and thanks for having me. No, we are badly missing it. You know, as citizens ourselves, but of course also as a business. Particularly in Europe, we are highly affected. We have a beautiful on-trade business across the continent, which is highly affected, particularly in the second quarter and recently in the fourth quarter. At the half-year results, we announced that we expected a volatile second half of the year, not realizing how true that was going to be. We had a very decent third quarter. At the minute lockdowns are lifted, you see the business coming back very rapidly. But then with the second and third lockdowns in the fourth quarter, we saw that being affected badly again. Now, long term, we are very confident. You know, it's a universal consumer behavior to come together in a bar, in a restaurant, and share a beer together. And we believe that as soon as the pandemic lifts, that business will return, as we already saw, for example, in the third quarter.
Also, a pub's the only place you can get Heineken out of the extra cold tap, which is my favorite way to enjoy the beverage. I wonder if you've been able to take advantage of any innovations. A lot of manufacturers are delivering their products direct to the customer. That's probably not quite as easy with alcoholic beverages, but it is happening in your industry as well. So what have you learned during the pandemic that you think is going to stick after?
Yes. No, so those trends are very true for the beer sector as well. For example, in Europe, we have a pan-European online sales platform called Beerwolf. Revenue almost doubled. In a critical market, the UK, it even tripled. We have other direct-to-consumer platforms across the world called Drinkies, Things to Go, and overall orders tripled. So you indeed saw that with those lockdowns that people moved to online sales. That was a big trend. And actually, when you look to the exit rate in December, it's accelerating rather than slow down. Another important trend is zero alcohol, 0.0. And particularly our product Heineken 0.0, which was really a first mover globally, now available in 84 countries across the world. And it grew about 30–40% every single quarter and for the full year, lockdown or no lockdown. So for sure, you know, even with all the kind of impacts we saw in on-trade and across markets with lockdowns, we saw e-commerce, we saw 0.0 as clear, you know, bright stars. In general, you see a movement to trusted brands. Heineken being the most trusted international beer brand. Also, brand Heineken did relatively well. Volume was around flat, but we locked double-digit growth in about 25 markets in the world. The largest market for brand Heineken, Brazil, grew 40%. Another very important market, China, also grew double-digit. So, yeah, some bright stars we saw, and those trends we expect to continue into 21.
Let me ask you about your growth strategy, how much M&A plays a part in that then, Dolf. What kind of deals are you looking to do at this point? Where?
Now, first, good to say that we're very proud of our geographical footprint. It's balanced between developed and emerging markets. It's highly diversified. We are present in 80 operating companies, and we're always looking for expansion opportunities. Last year, even with the lockdowns, what have you, we entered the Peruvian market, but the acquisition of the Tres Cruces brand. We did an acquisition in Australia, buying some premium cider and beer brands. We did some smaller bolt-ons in Europe, in the Netherlands and Austria. So we're also always on the lookout in terms of strengthening our footprint. In general, we are very happy and proud of where we are with the portfolio, but that's of course a continuous labor to always enhance it and renew it and rejuvenate it. And in that sense, zero alcohol beers, lower bitterness beers, ciders, seltzers, there's a lot of innovation happening in the sector which excites us.
Is there any kind of THC beverage on the table here? I mean, is there a possibility that you can do something with the legalization of marijuana in the U.S. to broaden your product offering?
Of course, we are following the developments closely, but at this moment, there's nothing I can share on that at this moment in time.
Your
Dolf,
branding is spot on. The green, I think, would work well, Dolf.
Thank you. I agree.
Dolf, thanks very much.
Right, well,
thanks for joining us. Dolf van den Brink, the CEO of Heineken. Thanks very much for coming to talk to us.